Hello, everyone. Very glad to have you all here. Today we're discussing the UK retail sales that will be out in about 10 minutes, and me and my colleague Michael will cover it for you today. So at the current moment, the forecast for UK retail sales month-on-month data stands at minus 0.5%, and the prior figure stood at 1.9%. Retail sales surges in September and overall in the third quarter too, thus boosting quarterly GDP growth by approximately 0.1 percentage points according to the official statisticians. The Office for National Statistics is releasing third quarter expenditure data on November 27 within the second estimate of Q3 GDP. At the start of the fourth quarter, market participants expect sales volumes decline in October relative to sharp increases a month before. Month-on-month growth in total retail sales is expected to have fallen 0.5% from a surge of 1.9% in September. Sales excluding fuel are seen falling even steeper by 0.6% from 1.7% the month before. The annual rates are also expected to slow, and the ONS is releasing October data in about, as I said, 9 minutes or even less. According to the Confederation of British Industries, CBI, the overall balance of retail sales volume slowed in October, but the outlook remained decent. Growth in sales and orders for high street retailers remains resilient, but there has been a slight slowdown in the pace of that growth following a strong September. Internet sales are starting to ramp up again as we head towards Christmas, and we would expect them to continue this positive pattern until the end of the year. Ray Newton-Smith, CBI Director of Economics, commented on the survey. Low inflation and improving wages mean the prospects for sales growth are decent, but challenges remain, like the weakening global economy and competitive pressures in the retail sector. So we can't take this positive outlook for granted, Smith added. Let's move on, and I would love to show you the top 10 economists from different financial institutions surveyed on the matter. And according to their views, we have the Bloomberg survey summary, where the median estimate stands at minus 0.5%, average estimate stands at minus 0.43%, high estimate stands at 0.4%, and low estimate stands at minus 1.5%, whereas the number of estimates this time has reached 25. And now I would like to share with you community members' vote on the impact on the sterling dollar currency pair. And as you can see, the trader went bearish this time, 57.8 versus 42.2% bearish votes, and bullish votes. And Sonia says that although after the Fed meeting yesterday, which was confirmed that the rate of interest will not rise until 2016, and where it is shown that the economy of U.S. is strong despite not reaching the inflation rate target, UK fall in prices of 3.6% in September encourages buyers for the Christmas season and is improving data on retail sales, and there's an optimism in the sector overall. Thus, she is bullish on the pair. And following up, the British Retail Consortium said it's possible that some shoppers may be holding out in hope of some great deals at the end of November on the so-called Black Friday, the Holy Mother of Grail for the majority of women, I guess, out there. And the day following the Thanksgiving Day in the United States. Even though monthly rates of sales have been volatile, the overall consumer consumption in the UK is expected to continue supporting the economy, while inflation remains significantly weak and nominal wages continue to rise slowly from the post-crisis lows. In its latest outlook for growth, the UK's National Institute of Economics and Social Research said the economy over the medium term was expected to become more balanced, as improving economic conditions in Europe would lead net trade to offset a moderation in domestic demand growth. And that's pretty much it on the fundamentals. Thank you very much. And now I would like to give the floor to Michael, who's going to cover the technical part. Please.
Thank you, Belina. Hello, everybody. So for today's data release, we have the table, of course, and I've chosen actually the positive suppress trading strategy despite the rather negative forecast for today. Since the yearly data is also expected to improve, and thus we could still see a rise in the sterling dollar currency pair. So the market sentiment for the given pair is quite bullish, bearish at 59.74%, with the sterling being bought in only 40.31% of all cases, and the US dollar being sold in 59.50% of all cases. Concerning pending orders, in the 50 pip range, the majority is to purchase the British pound, namely 60%, while in the 100 pip range, we have only 44% to buy the sterling as well, so the majority is to sell. Concerning other market participants, they are also bearish on the table, with Oranda having 55.04% of short positions, 57.40% of Saxo Group traders are also holding short positions, and the daily fix sentiment is rather close to the equilibrium, so only 51%, hence it's kind of neutral, but the bears slightly outnumbering the bulls. So if we move to the market reaction table, where we see the reactions for the previous 5 retail sales data releases, the largest reaction was 52 pips, when the data extremely surprised to the upside, rising up to 1.9%. And the smallest one was 21 pips, when the data fell in line with expectations. So, since we are expecting a rather sharp decline today as well, there is a good chance that the data will actually be slightly better than anticipated. And the average reaction we could expect today is around 35 pips. And based on this reaction, we set the take profit and stop loss levels accordingly, with the take profit level currently located at 1.5290, which is almost on top of the 4-hour R1, so bolstering this resistance level, while the stop loss level is located somewhat closer to the daily pivot point, and we also have a trend line slightly lower, but it will definitely be reached, and it's also in strokes since it needs more confirmation, another test of the trend line in order for it to be viable and to provide support more efficiently. So we have slightly over a minute left, and the cable has been trading flat for most of the day today, except for the rise in the Asian session. So it's waiting for the Yukalis to determine which direction to take. And let me just mention the technical indicators, which are giving us mixed signals in the 30-minute time frame, bearish signals in the 10, daily, and the weekly ones, bullish signals in the hourly and the 4-hour one, and distinctly bearish in the monthly one. But as usual, the most important indicator is the 30-minute time frame indicator, since it was updated specifically for the given data release approximately 30 minutes ago. And it's actually giving us mixed signals, so unable to confirm either scenario, whether the pair will go up or down. So we should probably pay more attention on the sentiment or on the value, the amount of the orders to purchase the given pair. So one more thing I would like to add is that the Scotia Bank, one of the top forecasters of the given data release of the UK retail sales, is actually forecasting a decline, a slowdown in the magnitude of the sales to minus 0.1%. So despite that being a decline, it's still a better figure than the actual Bloomberg forecast. So we might see a rise in the pair after all, but right now the pair is actually edging lower. So we already see the data in the chat, and yeah, the actual data is slightly worse than anticipated, but we didn't see a large reaction to the downside since, okay, only 14 pips was the initial reaction, so a lot less than expected. The core retail sales, the monthly ones, were also worse than anticipated, while actually the retail sales of the yearly magnitude were also slightly worse. Actually, all data was worse today, and still we don't see a large reaction to the downside, since probably because of the US dollar being sharply sold today since the beginning of the day, after yesterday's housing starts data and some speculation that the Fed still won't hike in December, despite the majority of the Federal Open Market Committee members voting for a rate hike in December. So I guess that will be all from my side, and back to you, Paulina.
Thank you, Michael. Yeah, the data came out slightly worse than expected, and we still see sort of a reaction on the sterling dollar currency pair. Yeah, it turned out that the retail sector wasn't doing that well if we compare it with the previous month. However, yeah, the sales period will begin very soon, and I'm definitely excited about it. And just like any other girl, woman, whatever, in our office, and yeah, and besides that, and we'll see what comes next. We'll see what the festive season will bring. Meanwhile, I would like to thank all the participants. Yeah, as I already mentioned in the chat section, you can share your views, thoughts, and definitely address your questions. We'll be more than happy to participate in the live communication because this is what we're here for. And definitely stay and check our next webinar by community member Liquidity on intraday trading. Yes, something very interesting to show you guys. Yeah, definitely stay with Dukascopy and have a nice and sunny day. Bye.